Hello everyone, Assalamu alaikum. This is Muhammad Elyas Hussain. My last three digit of my student ID is 163. Today I will discuss you about last monetary policy declared by Bangladesh Bank. First of all, provide a summary of the monetary policy, mention significant levels changes compared to the last policy, write the tools used by Bangladesh Bank, suggest the forms needed from your understanding. Now, first of all, monetary policy. Monetary policy is the process by which central bank, like Bangladesh Bank, manages the money supply, interest rate, and inflation conditions to achieve the economic goals such as controlling inflation, stabilized the currency, and promoting economic growth and reducing unemployment. To it involves tools like adjusting policy interest rate, influencing leading and borrowing rate, regulating and amount of money circulating in the economy, and managing the exchange rate. In FI 2023 to 24, Bangladesh economy faced high inflation primarily due to currency depression to currency description and global commodity price, with inflation peaking at 9.93% in October 2013. The external sector improved slightly with reducing trade deficits, increased remittance inflows through the currency saw future description to stabilized inflation and manage liquidity. Bangladesh Bank adopted to contractionary policy transacting to an interest rate corridor and increasing the repo rate to 8.5%, currency 9.5%. Private sector credit grew modestly, while public sector credit declared. The banking sector maintained sufficient liquidity support by the central bank. Continuous approach to the capital market remembered stable deposit, global uncertainties. Overall, Bangladesh focused on mitigating inflationary process, standardizing the currency, and balance growth in a challenging environment. Second number is mention significant changes compared to the last policy. Uh, Significant changes in Bangladesh monetary policy FY 2023 to 24 versus H1 FY 2025. Number A, policy rate and interest rate corridors. In FY 2023 and 24, Bangladesh Bank implemented a contractionary policy by raising the repo rate several times, following at 8.5% to control inflation. The interest rate corridor was narrowed by plus minus 150 base point to enhance policy effectiveness. In H1 FY 2025, BB kept the repo rate at 8.5% but focused on stable corridor, balancing liquidity and leading needs. Number B, shift from smart to market-based interest rate. FY 2023-24 saw the removal of the smart formula, allowing market-based interest rates align more directly with monetary policy objectives. H1 FY 2025 sustained this approach, refining the IRC framework to future guides in the interbank call money rate within the policy rate boundaries. Number C, exchange rate policy. In FY 2023-24, BB introduced a crawl peg system for the exchange rate, which allowed to gradual currency adjustment to reduce volatility. H1 FY 2025 contribute this system, maintaining the Taka 117. Number 4, liquidity and money supply adjustment. BB significantly reduced the several money growth in FY 2023-24 through quantitative targeting, keeping several money growth below project path and manage inflation. In H1 FY 2025, BB maintained tight liquidity with control open market operations. Number A, foreign exchange reserve and external sector management. During FY 2023-24, BP managed several activities by selling USDT, meeting market demand, which lower reserve but help stabilize the taka. By H1 FY 2025, BP adopted measuring the enhanced foreign currency inflows including receipt regulation for remittance and investment according account to aim to strengthen. But G, inflation control a priority. Both FY 2023-24 and H1 FY 2025 prioritize inflation control, aimed high global and domestic inflation rate, with BB expecting to reach an inflation target of 6.5 by the end of the FY 2025. Last monetary policy of half FY 2025, Bangladesh Bank employs several monetary policy tools aimed to control inflation, stabilize the currency, and in ensuring economic stability. Here, the primary tools of Bangladesh Bank utilizing policy interest rate, repo and reserve repo rate. Repo rate, Bangladesh Bank has kept policy repo rate 8.5, using the central tool influence a leading rate access across the Bangladesh banking system. Number B, interest rate corridor. BB transaction from a monetary aggregate target framework at interest rate targeting framework by establishing an IRC. The framework aimed to keep the interbank call money rate in line with the repo rate. Number C, open market operation. BB conduct OMO, open market operation, including the sale of government securities to control liquidity in the banking sector. Number D, several requirement, CRR and SLR, cash reserve ratio CRR and statutory liquidity ratio SLR. These are minimum several banks must hold either to cash CRR or in liquid asset SLR adjustment. This ratio can influence how much money banks can lead directly